We've talked before about central bank buying, no breaking news there, but what we haven't talked about is whether or not they're leaving anything for the rest of us. That part seems important. So one of the myths that we hear around here is that gold is not consumed. It's not lost to manufacturing in any substantial quantity. I think it's one of those comments that probably tells us you're a silver bug without you telling us you're a silver bug. Now, why would I say that? Well, one of the arguments for silver being undervalued is that it is consumed by industry. So manufacturing takes that supply off the market. Well, a substantial amount of the gold supply is taken out of the market in a few different ways. One is through jewelry. We all know this. Around 50% of annual gold mine production goes to jewelry demand, and that's a lot of gold being consumed. The other three main categories, in no particular order, are investment demand, manufacturing, and then, of course, central bank demand. Now, there are people out there who would say that gold demand isn't actually taken out of the market. It just gets moved around. Well, I'm going to tell you why that's wrong and why it matters. Before we get back to it, if you're looking for gold and silver, hit up SD Bullion. New customers can even get gold and silver for spot. That's sdbullion.com/new. So let's back up to 1999. If you were to look at data from the World Gold Council, you would see that central banks collectively sold somewhere around 3,800 tons of gold from 1999 to 2009. So that provided a lot of supply for these other categories like jewelry and retail investment, and it's a big reason that the price of gold was so low. Now you can see here it was even more dramatic at a few points in the 70s and 80s after the US ended convertibility of the dollar into gold. And I don't have specific figures from that time, but it makes sense. The United States had just ended the gold standard. So let's just stick to the past 30 years for a minute. Now, prior to 2009, central banks were net sellers of gold like we just saw, and then after this point, they became net buyers. We can see what the price trend looked like. So you probably get where this is going. You've heard me talk about China's gold buying over the past 18 months. So let's go back to November of 2022. And once again, we can see the trend here. The price of gold is going up. So what we're seeing is central bank buying, taking gold supply out of the market, consuming it. The gold is not burned off into the atmosphere, but from a supply perspective, that gold is no longer there. I think I also said I would tell you why it's important, so here it is. The numbers tell us that central bank buying represents about 34% of annual mine production. So 3,000 tons of gold were produced in 2023. 1,037 net tons were purchased by central banks in that same period. So just over a third of all gold mining was consumed by central banks. So that's no longer available for jewelry, for industry, for individual or institutional investment. That demand now comes from a smaller pool of supply. So there's a little bit more to this though, because in the case of jewelry or retail investment, higher prices regulate demand. So if a gold buffalo or this 2009 ultra high relief double eagle suddenly costs 20% more, you or I might slow down our buying. But we don't see that happening with central banks. So central bank buying is strategic. It's strategic in a way that jewelry demand is not. They're not buying their lady friend a gold locket, so higher prices aren't going to put them off that next purchase. So we can't really overstate how important this is, but if we were to try to play it out in the future, the view does get a little bit blurry, predictions get hard, but what we're looking at here is very strong physical demand with 34% of production just taken off the market. Now, in addition to that, you have the Fed policy shift, the eventual rate cuts. Right now, what we're looking at is just the anticipation of that, but eventually it catches up. What else? Well, add in a few large regional conflicts and you're looking at very heavy demand for gold at a time when supply is light. So if you want those specific price forecasts for gold, you're in luck because there are a lot of people willing to give them. We see $2,500 in 2024. That's actually coming from some major bank analysts. We've even seen $3,000 in the next 12 months. And those are coming from what I would call reliable sources. Now we see much larger figures. We see them without firm timelines and probably from less reliable sources. But the important part to me is understanding the forces moving gold prices just to help scrutinize other people's predictions. So I hope you made it this far because I buried the lead on this one. We actually are seeing net purchases from central banks in Q1 2024 higher than we saw them in 2023. Net purchases were 290 tons. And if that same level continues through the next 3 quarters, that's 1,160 tons, and that's a record for central bank buying any time in history. Unless my sources are wrong, and I don't think they are. So we're looking at historically high demand at a time of historically high prices. This is completely new behavior. So I made a quick purchase the other day when spot price dipped below $2,300. I'm willing to call it a dip now. At the time, I think I mentioned that I was about 50-50 on whether we'd see a further dip the next day. And none of this means that we won't see more, but what I was looking for was 2 things. I was looking for clues from the Fed on 2024 rate policy, and I was looking for central bank buying. Now, the clues we got from the Fed, that actually leans toward a rate cut soonish. If we look at the CME FedWatch tool right now, that tells us 64% of investors expect a rate cut in September, and they're expecting 2 rate cuts in 2024. Now, who knows if any of that will happen, but it's the expectation that drives price, so that's what I'm looking at. The second was central bank buying, and now that we have that, what we're seeing is they're continuing to buy at record levels. So if you were waiting for a big drop in gold price, you might have to wait a while longer. So let's call it good there. Let us know if you're buying, if you're looking at this like a dip, or if you're hoping for more. Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. If you're still here, the word today is dip. Thanks again for watching. I always appreciate your time. Take care.